Well, now let's stay with banks, because a big part of the support package for the economy is actually the banks, the recession shock absorbers, as APRA keeps calling them, offering deferrals on things like loan and interest repayments to business and mortgage customers. Well, quite a time for Peter King to be announced as Westpac's new chief executive. Peter King, congratulations on your formal appointment. Now, I'm thinking that both you and your chair, John McFarlane, have been very involved in banking for years. You've seen internal and external crises. How is this one different?
Well, thank you, Tiggy, and good morning. In relation to this crisis compared to the ones that we've been through, if I think about 92, 93, that was really off the back of very high interest rates, which then saw impacts on the economy, particularly lower commercial property prices for the bank, and that was something that we had to work through. In relation to the GFC, that was really about financial companies not having confidence to deal with each other. And then that had impacts on employment going out into the economy. If I think about the coronavirus, this is really what we call a real economy issue. So overnight, we had a lot of businesses lose revenue. We had a lot of people lose their jobs. And it's a very widespread correlated event that happened around the world and all parts of Australia and New Zealand. So that is what's different. That's then fed through into the financial system. So the key to this one is employment. Exactly.
Now, you're dealing with, I would imagine, quite a backlog of customers. Just how many small businesses and retail customers are we talking about?
So, Tiggy, we've had around over 100,000 consumers reach out and ask for hardship packages in all products, so mortgages, credit cards in particular. And we had over 25,000 small business customers reach out and ask for those packages that we have for small businesses.
Yes.
We also have, for the large businesses, we're dealing with those individually, working out one-on-one what they need and providing assistance for those large customers one-on-one.
There are concerns that have been raised about things like cumulative interest being charged on the 6-month deferral of loans, the interest on it, and also what's happening with credit card charges. Now, some other banks are offering special deals. What are you doing?
Tiggy, I might just start. I'll come back to that question, but we're managing a fine balance at the moment. So we have borrowers, we have savers, depositors, and we have shareholders. So at the moment, it's not about managing profitability for the bank. We will see impairments go up and profit will reduce. That is a big question for us. So it's managing all those moving pieces. In relation to loans, the big move that we've made is the packages where we've deferred principal and interest repayments for 6 months for small business and up to 6 months for mortgages. That is what will offset the big impact for loss of income. Now, if customers need more, we would encourage them to call us and we'll look at them on a case-by-case basis, and that covers credit cards, mortgages, small business. In relation to credit cards, I'd also highlight that Westpac has a less than 10% credit card available. No rewards. It's a basic card, and that might be appropriate for people as well.
But for further hardship cases, the idea is to get in touch with Westpac directly for any further help from you.
That's right.
OK. Now, we talked about the hardship and this 6 months. On the other end of this, particularly if we look at small business, you'd think, well, what's going to happen in 6 months' time when suddenly all these debts have to be dealt with for small business? Isn't this going to be a crisis all of its own?
Oh, I don't think about it like that, Tiggy. So there's 2 stages to think about this. Stage 1 is exactly what you said. There's been an income shock in the economy. We will delay repayments to help people navigate through that income shock.
So beyond the 6 months.
And then if we look at the second stage, that the most important thing for the economy, which is also very important for the bank, is we get a fast restart of the economy. So we need as many people as we can going back to work. And then the debt, the debt that we've got will take longer to pay off. But it's manageable. So the big thing for us is a fast restart. businesses being ready, businesses having stock, supply chains being ready, employees being ready to go back to work. That is what we need, and that is in the best interests of the economy, of small business, of people and the banks.
Yeah, we've got the Prime Minister's wage subsidy package now, which has come in, and that's led to your chief economist, Bill Evans, I know, pulling his peak unemployment down from 17% to, I think, 9%, which obviously is much better news in terms of cranking up the economy. But what you're saying is that for these small businesses at the other end of the bridge, you could, if they're still in trouble paying back debts, create some sort of softer landing leniency for them.
Yeah, well, Tiggy, our learnings out of previous crises, whether that be the GFC or the 92, 93 recession, is the economy never comes back to be exactly the way it was. So consumer behaviour will change, business behaviour will change. We're giving businesses every chance we can for them to adapt in the next 6 months, be ready for the restart, and we need that fast restart. But we're realistic that every business will be able to manage through this period because there are behaviour changes.
What about dividends? All over the world, we're seeing central banks, finance ministers, particularly in relation to banks, take the Bank of England, instructing banks not to pay out dividends. We've literally this week had the RBNZ in New Zealand basically say that all the big four Australian banks' New Zealand subsidiaries will not be paying a dividend back to you guys. Where does that sit in terms of your ability to pay dividends? Because APRA appears to be keeping its powder dry on this at the moment.
Yeah, well, we're about to rule off our books in relation for the half, so that's a decision we actually make in about a month's time. In relation to New Zealand's not a big part of the New Zealand portfolio. It's a bit over 10% of our business, so it's not the main game for us in terms of dividends. But the important thing is balancing the stakeholders. So this bank is actually owned by millions of Australians through super funds. So that's the primary stakeholder there. We know a lot of them rely on dividend as income.
Yes.
And so that's very much a consideration.
Yeah. On
the flip side is the strength of the bank's balance sheet. I would highlight that the banks in Australia have spent the last decade building our capital buffers. So unquestionably strong.
But do you expect APRA to come through with a ruling that banks won't be paying dividends?
Well, we'll be in discussions with APRA in the next month. So that is a policy for government and regulators. Certainly you've heard about how I think about it.
Yeah. All right. Finally, we've obviously had the Hayne Royal Commission. Westpac has had its great difficulties around Austrac in particular. Now, all this is still going on, of course. How do you think Hayne's push, I suppose, to make banks think about customers more has influenced your ability to act fast now? And also, how are you going with repairing all that side of your business?
Yeah, I think, we had some important learnings out of the Royal Commission, and probably the largest one was to really focus on customers that are vulnerable, don't understand financial services or need help. And that's coming to the fore at the moment. The organisation understands that. We've thought and acted very quickly as the industry on the debt repayment side because that was required. That in concert with the job seeker, job protection initiatives from the government is massive in terms of helping people through this period. And more generally, risk management is one of my priorities as the new CEO, and it is a top priority.
Peter King, thank you so much for joining us at this really challenging time, and good luck with it going forward. Thank you.
Thank you, Tiggy.